The Bank of England have been consulting about some key things which could mean you could be borrowing more money next year. In this video, we're going to go over what it is and how it could help you out. Hi there, Lee Everett from Lee Everett Property, and I'm passionate about helping as many first-time buyers buy their first home. Over the last 18, 19 years, I've dealt with thousands and thousands of property transactions, so if you're after the best tips, advice and news on buying your first home, you're in the right place. Over the last few weeks, the Bank of England have been consulting and reporting on whether they should remove a stress test which could really hamper your affordability. In 2014, because of the financial crisis in 2008, banks started making buying a property and lending a lot more difficult. They put lots and lots of rules, restrictions to lenders which they must do to their applicants in order to give them a mortgage. One of those rules was a stress test. Now, this stress test was designed to see if applicants would be able to pay the bank's standard variable interest rate plus an additional 3%. So this stress test was designed to gauge whether you, the borrower, would be able to survive and able to pay your mortgage in an environment where interest rates were going up quite steadily, and to make sure you were not vulnerable to not being able to pay your mortgage and potentially be repossessed. But as interest rates are considerably lower than what they were in 2014, the reason for this stress test doesn't seem to be there anymore. Interest rates are at an all-time low, even though they have been raised to 0.25% from the 0.1%. Even with that increase, the chances of you having to pay around 6.5–7% on your mortgage payment is highly unlikely, and that is why the Bank of England are looking to scrap this in 2022. If and when the Bank of England scrap this test, hopefully in the early part of 2022, what is this going to mean for you as a borrower? Are you going to be able to borrow more? And in theory, yes, you should be able to borrow more. When you go and do your online calculator where it works out 4.5 times your income, it's going to give you an amount of money that you can borrow. Then the lender will look at your affordability and then do the stress test for you, so that amount will be less generally. So in theory, when you do go online and do your online calculations as to how much you can borrow, the figure you put in there should be a much more better representation of what you can actually do. But always speak to a mortgage broker to get financial qualified advice, because they are worth their weight in gold. If you do need a financial advisor, let me know. I can put you in touch with someone. In theory, this sounds like an absolute fantastic thing for first-time buyers in particular. If you're able to borrow more money when house prices have never been higher, that can only be a good thing, right? Well, not entirely. A lot of people are thinking that if more and more people are able to borrow more money, that's just going to push house prices up even further. If the house prices do start going up, then the only way I can see you as a first-time buyer going to benefit from this relaxation in affordability rules is to buy sooner rather than later. Once this rule has been relaxed or even scrapped completely, if you're able to buy at the beginning of any potential price increase, and remember, house prices generally go up all the time unless there's a major economic event, then if you're able to buy here rather than up here, your money is going to go a lot further. But I've been saying that for ages. The longer you leave buying a property, the more expensive it is for you in the long run. And just to back that point up, Halifax have said that for the last 18 months that house prices have increased on average around £1,700 a month over the last 18 months. So every month you are leaving it, it's going to be costing you nearly £2,000 extra to buy the same property. So it really is key that you're able to buy sooner rather than later. Now, I'm not particularly sure why the Bank of England have decided to do this now. Are they preparing for a potential slowdown in the property market and hope that this may just keep it simmering? What's the word I'm looking for here? Simmering along nicely, or what? But this is what Zoopla thinks is going to happen. Let me know what you think, and I'll see you next time. Take care.